Hi, everyone. Welcome, team. Today we have a packed house. We have some special guests. We have Patrick, we have Tim, aka Chester, from our macro room, and we have Barry. Welcome, Barry. I think you had a session with us a few months ago, and glad to have you back. It was very great. So today we're gonna go through some live examples from Barry, also how you use the Menthor Q data, but we're also gonna spend time on FOMC and looking at what's happening in the market. Before we do that, as always, I'm going to share our disclaimer for a few seconds. And please send us any comments you have or any questions through the comment section. All right, so Barry, I think we're going to start with you. First of all, for those who don't know you, maybe if you want to give like a short intro on your experience, what you did in the past, and how you are now obviously trading almost full time, and how we were obviously able to help you, and then we share some example to our viewers.
Okay, sounds great. Yeah. So I'm a doctor of pharmacy by trade and sort of a healthcare entrepreneur. Been playing on with trading about my whole life. Really got serious about it in 2018. Lost a ton of money in 2018, over trading, oversizing, and decided to really get serious about it in 2023. I actually hired a mentor and lived with a guy for over a week, and it really raised my belief level about trading. I really embodied that whole concept that trading is the easiest, simplest, hardest money you'll ever make. So since then, I've been trading full time and became sort of consistently profitable. I've been refining my edge, looking for different edges. Looking for different edges is what brought me to Menthor Q. I really, in my trading style, I love finding a way to exploit an edge and then testing it, forward testing it, testing it live. The market is like a big puzzle. And so in my trading style, I have lots and lots of setups, lots of edges, I think. And Menthor Q has really been able to give me a ton of confidence around my edges because of all the confluence that I see with the levels, with the option market, and the education is top notch. So it's great stuff.
All right, so I'm gonna put your screen on the presentation, and we're gonna go through some example maybe from today as well. I think you had some really good examples.
Yeah, so today's FOMC day, and I really don't trust the markets too much on FOMC day until after the news breaks. So I tend to look at the alternate products first. In this case, oil has a news event, so I wasn't going to trade oil. So I was looking at gold and silver, and I wanted to show, here you see the Menthor Q levels that are plotted. We got your blind spots, and you have the basic levels. One of the setups that I use is I wait for something called the initial breakout, which is all the volume, statistically speaking, most of the volume happens in the first hour of trading. And so with gold, the pit session is 8:20 to 9:20. So there was a perfect setup today. Look at this. When you look at this chart, that shaded area is the initial balance high and the initial balance low of the first hour. So there was a break of the HVL like earlier, but I didn't catch it because I was working on something else. But when the initial balance closed, okay, I was waiting for a solid break of the initial balance. And if you look at the chart here where my pointer is right after the gold shading, you'll see that it had broken put support. Well, typically on a put support setup, I wait for it to go back and retrace the put support, which it did. And it broke the put support. Now I have 2 points of confluence. We got a break of put support HVL 0 DTE. There's a break there. And there's a break of the initial balance. Now, statistically speaking, I know from my statistics that the initial balance will break about 78% of the time. And there's about a 70% chance that when the initial balance breaks, it's going to go 1.5 times the IB. You're going to get excursion of at least 1.5 the IB. So we look over here at today's initial balance. This little indicator down at the bottom, it was 8.6. So I know I'm going to get half of 8.6, which is 4.3. I'm going to get at least 4.3 of range, and probably more, because relative to the average initial balance, this was a small initial balance. So I'm probably going to get more, but I feel really good about being able to get what I can get. And so right here at 1.5 the IB, we have JEX1. Coincidence? I don't think so. So I took the break right here, and I kept piling on. I could, and I was doing this in Top Step. So let me flip over to that chart just to show you the difference between trying to trade a Top Step or, a combine without the levels, and how confusing it can be. Let me see here. Present. Share. Yeah, so you can see this gold trade from this morning. If you look at that, you're kind of looking at it and saying, well, what the heck got you into that? Like, I don't get it. Why did you do it? Was it a break? Was it, but this is where the breaks were. And you could see I was just shorting. And then my last buy was where GEX1 was at 260.50.1, which is basically GEX1. So I was filled, and that trade netted just over $500, about $550. So such a great great setup there. Let me see. Then another setup that occurred this morning was on the ES. So different kind of a setup here. So I'm going to show how I use Menthor Q in some of the. Here's a trading style that has an edge. This is a VWAP, and you have -1, -2, +1, +2 standard deviations of VWAP, -1, -2 standard deviations of VWAP. So, a lot of traders will trade around VWAP. I like to buy in the green zone, sell in the red zone. But then I go back and I look at the levels from Menthor Q to see what's going on. So if you look at this little zone here where typically there's an edge, this was at like 940, 945, this area right here. You're at 1 standard deviation of VWAP. And, it'd been trending down all morning. It's looking pretty bad. But then you get right to here. So let's look at the Menthor Q levels and see how the confluence was there. So just remember, 945, you're at -1 right now. And then we're going to stop that screen. We're going to share another screen, which is this one. Ta-da. So right here, 940, 945, check it out. We broke the HVL 0 DTE. It's looking good for a short. And if you're a scalper, that probably would have been a great short. This is a 15-minute time frame. But then I had a reversal candle right here. It went back through the HVL 0 DTE. And so that was a place for me to go long, right? Because it went through, retested, and broke through. And there was a confluence with that other area I showed you, which was 1 standard deviation of the VWAP. So, perfect confluence that says, dude, you need to go long. go long on here and ride this thing up. But I'll tell you something else. When this was happening early in the morning between 8:45 and 9, I saw this down here, the HVL. If you look at the other Menthor Q levels, here's your 1-day minimum. Okay, here's your other HVL. And then here's your put support down here at 60.50. So I was selling puts all the way down. As it was getting to about right here, I sold a put here at 80. I sold one at 50. Actually, two at 50. I sold one, and I sold one at 6,000. And all in all, I was in for 5 puts. Now I usually sell puts for the current week. So Friday of this week, no matter what day it is. And and so when they went and when the market reversed, I was making money on the long side and making money on the short side through theta decay of the puts. So it's just a great way to, for me, I didn't know where the market was going to stop, but I knew I didn't want to buy. I didn't want to catch a falling knife. So what I really wanted to do, because I'm long bias. So if I want to get long, I'd rather get long down here where statistically speaking, I'm going to get some mean reversion if I'm wrong, or if my entry is kind of ugly. Well, if my entry is because I sold a put and I get assigned, I'm okay with it. Because number one, I've collected premium, and number two, I'm in at a good price. And it's likely I'll play market maker because I learned how to do that from the Menthor Q Academy. I might play market maker, and like if this were to break, I know I'm going short. So I would have been short puts. I would have been fully hedged because I'd be short. I would be short MES contracts or ES contracts, depending on what I'm trading. And you can just get in a flow state with these levels, and you're just selling all around everything, and it's great. And that's sort of my style when I'm using Menthor Q, is I feel super confident about where to sell puts and where to get long or where to get short. Like it's kind of blue sky. If you break an HVL level and there's down here, there's a blind spot 10, it's going here. So I would probably be, as soon as this break happened, as soon as it cleared GEX 2, I'd probably have a stop sell order in at GEX 2, and I'd just be waiting for this level to be hit. Also, using my IB strategy, my statistical IB strategy, you notice that here, 1.5, the initial balance is coincident with GEX 4, and 2 times the initial balance is coincident with GEX 2. So there's a lot of confluence there, some great targets. So even if you aren't using initial balance breakouts like I am, and you were just using the Menthor Q levels singularly, you'd have some really great targets after a break if you were to do a short trade. Now, today's FOMC, I got a break high. So I also took this. I also took a long off of the initial balance high with my initial target was here at GEX 1. I'm sorry, at IB. My 1.5, the IB is this level right here. And then these were my other targets. So earlier we were talking, Fabio and I were talking that in the intraday levels, this target right here was actually coincident with, I think, SPY and GEX 4. Did you say?
It was, let me pull it up. It was the intraday GEX 4 from SPX. We were actually trading that level as well. So we were trading the breakout right here, and then use this as kind of like our target area. And then we had obviously our 1-day max all the way right there. So we were waiting for this break, and these were the levels from the future. So we had our GEX 1, but in the middle we had our GEX 4 intraday levels.
Yeah.
And then also we had our HVL 0DT kind of moved up since the day before. So that was also a good entry point for us.
Yeah, I realize I'm preaching to the choir here, but traders in the audience, that the levels may seem like magic because of how everything lines up. And you would think trading would be so easy because, I'm quoting you these statistics. Hey, if it breaks high, it's going to go to this level right below GEX1 70% of the time. So why doesn't everybody win? Sometimes it's hard. I was in the gold trade and I missed my entry by about 2 points. So I was 2 points behind. So I got a little in my head. I sized up. I added 3 more contracts because I wanted to make up for the 2 points I might lose. And then I started to get shaken out a little bit right here. And, it messed with my head because I didn't execute perfectly crisply on the break. So even though I have a great setup, I know exactly what to do. Execution is key. And that takes practice. That takes time, knowing your platform, being able to set things up. And
yeah. I mean, this was all. Thanks for sharing, Barry. It was great.
Any questions about that? Patrick was asking me about, so Patrick and I had a conversation once, and Patrick was coaching me on, I was telling him I have a tough time around certain levels because if there's not high relative volatility, I get chopped up. And then he said, don't trade them, dude. He says, wait until there's high relative volatility. So I was like, of course. Like I wanted to win so bad that when something got close to my level, I felt pressure to push buttons. But now I have a little volume thing on the bottom. When I get volume spikes, then I'll take the trade. And the trade that I said earlier, where we rebroke the HVL level high on this little cyan colored candle, which was also coincident with a mean reversion trade on -1 of the VWAP. I also had a high relative volume candle. This green means that there is a positive delta. So look at all those confluences. I'd be crazy not to take that trade, and risk the bottom of this candle. So that's what I did.
Yeah, that's a great one. And I think personally, what I was learning doing FOMC day is looking to the SPX, because the SPX is one of the most important index. And maybe Fabio, I was sharing my screen. Maybe you can show this really quick. And this is what we was talking also about this. So we can clearly see, so we are in the range between the high vol 0 DTE and high vol. So we have our high vol 0 DTE level here, and we have our high vol level here. And between this one, I think this is nothing. So I want to see if we came to FOMC, if you're breaking through the high wall with strong momentum, strong volume, and maybe targeting the 1-day max, or if we're falling down, all right, targeting 1-day min. But in the middle of the range, I don't know. It feels like it's not a good area. Of course, if you be scalping, everything is fine. You can make good money, like what we're getting here on the opening. We're getting the reaction on the high wall. We're targeting high wall 0 DTE. We was doing this in a live trading session together with Fabio, me and Fabio. We was making money. But I think the big money is when we're getting the FOMC, and possible we're getting the strong momentum, can target 1-day max or target 1-day min. And we have this doing the FOMC very often, that we stay in the range. And yeah, this is something what we get also today.
Yeah.
Yeah.
And yes, Barry, you're 100% right. And I have a question for you. You were saying you was trading the Top Step account. I will
Yeah.
not making so much promotion for Top Step. So Top Step is also a really good one. There are also other ones, but for me, it's more important. How important are the Menthor Q levels for you for also risk management? Because in the prop firm industry, or if you're trading in challenge, or if you're trading a funded account, the risk management is key. So is this really helpful for you to say, okay, I have my profit target, I can target now my area based on Menthor Q, some gamma level, and also about the risk management? Do you use also the gamma levels for the risk management?
Yeah, absolutely. I would say that one of the concepts that I learned about was having a risk budget for the day. Now, $50,000 Top Step is really a $2,000 account. And when I first started trading that thing, I was like, okay, I'll have a $30 stop loss. And and I'd get chopped up so you lose 3 times with a small stop loss, and all of a sudden you're down 90, 100, 200, and it feels like you can never win. So the old saying, bigger stop loss, higher win rate. Well, as long as you do that with small contract size, that makes more sense. So 10% of a $2,000 account is $200. So on a new account, I'll give myself a $200 risk budget typically, and just do 1 or 2 contracts on either the MGC, the MES, or MYM. MYM is really great, and use the Menthor Q levels to to manage that risk.
Well, this is something I was also observing, especially if you're trading maybe live account, funded account, or whatever you're trading. I was thinking like the first time when I was meet Menthor Q is, hey, the gamma levels, they are amazing, because this is helping me for proper risk management. And it was really hard sometimes. So of course you have the Fibonacci, you have pivot points. There are many other ways how you can target maybe a profit area. But for me, with Menthor Q, it's become much easier to say, okay, I'm targeting now the 1-day min, the 1-day max. What you was also showing, if we go and choose the high wall, we can target the 1-day min. So boom, this is something where I would be, without Menthor Q, not so comfortable, because especially if we be on the uptrend, and how often is this happen that we say to ourselves, oh man, I should take my profit. Fuck, take my profit. So I'm really good in profit, but there are maybe 50 points or 100 points below 1-day max. And we can hit this easily, but we have to be patient. And sometimes the patience will pay you off. Sometimes it's much more. We breaking through the 1-day min, or we breaking through the 1-day max, and we targeting the next area. That's the beauty of this, so that we have clear target points, so we messing not so around with our mind. And this is something I think what helps every trader who are on a prop account or challenge or whatever become a better in risk management and profit taking. This is the key.
And I think if I can add to that, this is kind of like what institutions do. They add data to strategies and always try and improve them. So they always try to drive up your performance by also helping you manage the risk. Because if you can avoid those bad trades, then that can help you with your overall kind of performance and your overall goal as well. So yeah, that's the whole point of why those levels are important, why data is important, and why simplifying data is also very important.
Yeah. And I hope I'm not overcomplicating it by giving so many different examples of confluence and how trades can work. Because you can pick one moving average cross and make your living on it. I'm just trying to point out that this is the journey every trader goes through as they find, they switch from system to system and they learn systems. Well, I think I've learned them all. I pick them up and I see that they work. And then for me, the challenge is proving to myself that I can make money on any system, you know, and that's just part of my personality. It's fun to try different things, and I don't mind putting my money behind those different things, because when you have things that you can believe in, like these Menthor Q levels, you don't have any psychological problems. You don't have any head trash. You know, you're just following a system and having good risk management. I just found another example on an NQ. If we have time to look at it, I'm not sure what you want to see it.
Yeah.
Okay. Let me see if I can. This would be Gazo. Okay. All right. Can you see the yeah.
Yeah.
So I journaled this setup before I took it. I call this the JP break, but there's 100 ways that this trade would have worked. I'm going to show you a bunch of different setups. So the JP break is when the market starts in one direction and goes in another direction and breaks through that level. So around 8:39, the market was going up, and then by 10 it broke through the previous level. You know, the JP break is just a big, JP's the guy who taught me this, professional, ex-professional golfer, professional trader, great guy. Up, down. Well, I was like, oh, this looks like a JP break, but look here, we got an HVL level. How convenient is that? There's a JP break, but there's also a break at the HVL level. And so I said, all right, my risk is going to be GEX1. Like if I take a short at that level and it reverses to GEX1, well, something's going on and I don't understand what it is. So I'll just reassess when that happens. So I put in sell stops right here, waiting for that break at the HVL. And then I had some targets here, but my ultimate target was the 1 day minimum, and I was going to have a runner for put support. So it broke hard, and it broke so hard that I added here, and then I took it down to the 1 day minimum, and I was all out at the 1 day minimum. But just look at these levels. You know, for me, this was and just the average guy might say, well, duh, Barry, this is what you call a condition break, you know, or ICT guys might call it I don't know what they would call it, but it's pretty easy to see. But when you add that confluence with this, and oh, by the way, see my initial balance trade, it broke the initial balance. So I had so much confidence that it was going to go down there because everything was stacking. I was stacking all these probabilities on top of each other. And so it feels, you know, so the risk was GEX1. And, you know, that was about 50 points, right? That's a lot in the NQ, but it's not if you're just using a couple of contracts, you know, on like a top step. And you can really get a lot of excursion in a top step account with, as long as you give yourself a little risk. So, you know, 50 points with one contract, that's $100. I said my risk budget was about 200 a day. So, you know, so I would use 2 contracts, and then 2 contracts, and you get, you know, you can get 100 and what is that? 150 points of excursion.
Yep.
So that's 300 points of excursion. If you held it, I didn't hold it all the way because I took one out here, but yeah. So
Awesome. Thank you, Barry. And meanwhile, we have the rate decision. I don't know if Tim, you want to make some comment there.
I'm just looking over it right now. So, all right. So interest rate projection, first year, second year, third year, they are slightly higher, but given the fact we went pretty hawkish into this meeting, that's not that much of a surprise, I would say. Market-wise, you have these nasty wicks in NQES, obviously, but that's maybe more due to poor liquidity around this time right now. And other stuff like bonds, they are tanking as well, but bonds with longer tenors like 20 years, 30 years, they are already reverting this move. Looking over to rate futures, SOFRs. They got sold, obviously, okay, but I would say that's some sort of the outcome people have, waiting for, and it's maybe expected. So no big harm here, right? It may be change in 30 minutes, depends on what Powell has to say. But the consensus for next year is just 3 cuts starting in March. And let's see what he's talking about. Oh, that's not good for gold, obviously. Silver as well, copper, all the precious metals tied to the dollar because dollar makes a new multiple week high, trading around November highs. Yeah, interesting. Let's see how it evolves in the next 30 minutes.
Mm-hmm. All right, here we have gold.
I think you should not be looking to this, Fabio.
We were looking at this morning.
So he was approaching the put support. Fabio was short, and then we breaking a little bit above this. I think 58 US dollars. Okay, taking the losses because we're thinking, oh no, fuck, put support is now we're getting truth, and then I think 5 minutes later we're getting the down move. So
It happens. It's okay.
it happens sometimes, yeah.
I think we posted something about VIX and volatility like 1 week ago, something like that, some trade ideas.
Mm-hmm.
And that's now the case where you can make very good profits out of this with VIX and 1560, right? Was way too cheap. Volatility like 2 weeks ago. And those events, they are good to set up a trade.
Yeah. And Tim, from a macro perspective, like yesterday we had a good session about tail risk and volatility arbitrage. So if you guys must see that, is part of our YouTube channel under our live. But what about from a macro standpoint? Like, how are you preparing for 2025, and what are the things that you're looking for?
So for equities, I would say neutral. I don't have an idea here. I'm still short commodities like oil. That's something I would carry into 25. But I don't have anything particular open in equities. I still think we might see a little Santa rally, to be honest.
Yeah.
But that's nothing new what happens today and what maybe JP will tell us in 30 minutes. That's all baked in. And I think people, watching market news and reading stuff, they are also aware of the fact that we have this horrible breath right now, right? Where like 10 stocks in SPX are holding the whole complex up a little bit. And the question here is, will this stuff improve? Will the weaker stocks kind of mean revert and can maybe fill a new uptrend? But yeah, that's something I can't tell in this stream yet in this evening, to be honest.
Makes sense. Yeah, in the meantime, let's look at the action. This is Patrick's favorite setup, I think.
It's 1 day min in ES, maybe, as it looks like.
Yeah, HVL to HVL, 0 DTE. And then obviously, yeah, we are hitting the 1 day minimum as well.
So VIX over 16, that's a GEX level as well. GEX 1, big exposure over there. If volatility gains a foothold over there, you have these hedging flows into VIX futures. This also will then transmit into SPX, ES. Yeah.
Yeah, and also if we go into our intraday dashboard, we can also look at maybe some of the things that have changed since the previous. So, for example, here we see like spike in jacks at the 15 level. Let's look at SPX. So here we can see our latest timestamp at 12:30. So we see a lot of like negative positioning versus the previous snapshot, so versus our 10:45. And also we can quickly see the change in gamma versus the previous day, so versus yesterday. So we started positive today with positive gamma in the morning versus the previous snapshot. But then if we look at what's happening right now, we see like some sort of increase in negative positioning at these strike levels.
And those days can revert quickly, right? Tomorrow could be a completely different way. It's completely empty. ES, there's not much going on. If you compare bid-ask sizes, there are people trading 500 contracts, 400, 3. Yeah. Because low liquidity also means higher volatility and therefore bigger ranges. But it's super important these days to watch volatility with the VIX. It's the main driver right now.
I think, but the good thing is Chester and Barry, nothing surprised us really. Because through the levels, so we're getting the clear guidance.
Yeah.
Nothing really surprised us, yeah. So for me, it's like as expected. So there are only one way. So if we're getting up, so if the move goes more to the north side, all right, we have the high wall area there. So then we flip to positive. If we go getting now to the south, no worries, we're getting there. So no surprise. Yeah. For me, really, it's free money. At the end, everyone is chasing the inside traders or people, hedge fund managers or wealthy people. They're chasing the people. Oh man, why you can make so much money? We are losing. Come on. This was already there. The setup was there. We was in the range between the high wall and the high wall ZUDTE. There was a clear sign. If we're going through the high wall ZUDTE, then we can touch the north side. If we're going below the high wall, then we can touching the south side. So as simple as that. And
and even if you have a day like this and ES is touching 1 day min, so that's normal, right? There's nothing special about it. Even if you look at these kind of sinister looking candles, big red and so on, but it's still a 1 day minimum maximum range, so nothing special, and also gives you some more confident about the market because you can read it better, right? Barry was mentioned this one trade in ES in the morning, right? I have watched exactly the same thing around 9:20-ish, and VIX was dead, right? There was no uptick in volatility. That's a suspicious sign always when ES tanks like 25 handles and VIX is muted. Something does not fit. You should prepare for a long. I missed it then. I also got no fills on the upside. And then I thought, okay, you still have a limited upside because GEX1 is literally the high of the day, 150 today. And if you learn a little about options and SPX as a complex, you know the GEX1 is sticky like a bubblegum in your hairs, right? Something has to happen that you can have ES over 150. I mean, if you're a scalper for 2 or 3 points, that's okay, but I don't scalp. I want like 30, 50 ticks in ES, and I waited and did not trade it because the risk reward was kind of shitty.
Yeah, I got a question for you, Chester. So I had some orders in to sell some puts in case we got a volatility spike, and we did. So my orders got hit, and I'm really happy about that. But I was trying to sell more puts, and it is repricing fast. And what I've noticed is the Thursday's option expiration seemed to have a higher implied volatility than Friday's. Does that sound right?
So you're selling puts right now, or you did during the spike in volatility, like 2 p.m.?
I'm looking at pricing right now, just trying to, decide if I want to do it. But so Friday, it looks like Friday's at the money implied volatility is 14.3% on a.
And Friday?
On Friday.
Yeah, and Thursday?
And Thursday, I'm using interactive brokers, and they're not even giving me a number, but it's everything's repricing so fast.
Okay, there should be for Thursday. We have a GDP growth rate, labor market data. This stuff is kind of important, but it could also be to do with FOMC today and what happens the next day, right?
Yeah.
I mean, you have to think about it. If we maybe get a surprise today, the market is not done until the close today, right? They have to do maybe stuff tomorrow. So tail risk, let's say it like that.
Right.
So that's maybe the case. But around those times of higher volatility, I mean, option pricings can do really, really funky stuff. FOMC, CPI, and all the stuff. It's, yeah.
And that also Friday's OPEX. So Friday's the big OPEX.
Yeah, and Friday is OPEX. And it's a big one, isn't it?
Yeah. Yeah, it's a very big expiration on Friday. So.
Yeah, so I'm looking at the March contract, and I'm just wondering if there's an arbitrage opportunity here because the premiums are so much higher Thursday than they are Friday.
Mm-hmm.
That's not my trade, so I'm not going to do it. But I thought it was. There's one that just got hit. But
not on my side.
that was. I put orders out there at my levels with some high premium targets because I'm expecting, a volatility crush by Friday and mean reversion, and if not, I'm okay. I'm okay with it.
ES already is 1-day min. If you guys running SPX levels in ES chart, SPX 1-day min is right below, just a few ticks, give or take, nothing special. And the cool thing is always, if you're watching ES, put support is below 1-day min.
Yeah.
Means in theory, market position is beyond those 1-day standard move. which could mean we maybe trade below 1 day min, but
we'll find out.
Yeah, so here we have in the center our futures level right here, and then this is our SPX intraday levels right there. So
gold got lit up massively alongside with silver. Jesus.
So Barry, I think now you must printing money like a millionaire. So you was already setting your orders there. So come on.
I wish I was still short gold.
yeah.
I mean, macro speaking, every time we cut rates lately, gold has been going up. So I wonder what's different this time. Did I miss that? He did cut, didn't he?
Yeah, 25.
Yeah, for sure.
As
if Jerome says they cut, they cut.
Yeah.
He doesn't make surprises. Yeah, you have also taken consideration stuff like gold had an incredible run this year, right? And there's always a point where people trying to chase those returns, but in case of that, they have to pay a higher premium, right? Because the train is already on tracks like for weeks or hours, and you have to jump on, and then it's way more likely to get washed out before the long trend maybe will emerge again. And I think what spooked the markets a little bit is higher terminal rate. It's a dot plot essentially. I posted in the channel at the Discord. So maybe the people at the FOMC are saying, "Oh no, we don't cut that much in 25."
And now, Chester, the best gift from Jerome Powell to the market is now positive comments, and now we're flipping from 1 day min to 1 day max. Boom.
Yeah. to be honest,
congratulations.
I wouldn't be surprised, right?
Yeah. So man, it's amazing free money then. Holy moly! So,
if you spend decent times in front of your screens and you're watching price action like in ES the last 2 weeks, it's sometimes what the fuck is going on?
Yep. All right, and we get a question from Picky Trader. My MQES levels are different than ones on your chart. So maybe we're using the contract ESH 2025. So maybe check the contract, what levels you're using. So we're using the levels from the dashboard and from the bot. I think everyone should have the same. And what you were seeing before, this was the SPX intraday levels, end of the day. Intraday levels. So, and yeah, so.
Yeah, so these ones, the one here are the intraday from this morning. I think it was the first snapshot of the day, I think, Patrick, converted to yes, and these ones are the futures level from this morning. So
But Barry, do you have 10 minutes?
Yeah.
All right. Let's do it again, Fabio. We were speaking in the 6 a.m. morning club about this. Let's do it again. So
Okay.
I was really liking what you were saying. You were saying that you have an edge. You have an edge in your strategy, correct?
Yes, sir.
And I'm 100% sure you have also some really good A+ examples in your trading journal where you
Yeah.
can look into it and you can say, okay, man, if I set this, I have a clear risk target and I have a clear profit target and I have maybe a win rate over 60%.
Right.
Correct?
Yes.
And also, you be an entrepreneur. We have not to speak about your business where you're in, but you be an entrepreneur, correct?
Yes, sir.
All right. So, as an entrepreneur, so what is the most important thing in your business? That you can scale your business, correct?
Yes.
And if we're treating trading like a business, so one of the main parts for us in trading is that we can scale, correct?
Yes.
So we were speaking about top steps. Okay, let's take a look into top steps. And if we have only maybe the top step crew is listen to this, they can share this. It's a really good example. I will highly appreciate this. So okay, so let's blow the mind again. All right. So as a trader, I highly believe that if we want to treat this like a business, it's only the way that we can scale. So think about you trading only one MNQ or one MES, but you're trading your A+ setups, trading something with your edge, something what you can copy day by day by day or based on market condition. It's always the same. You execute your trade, you follow your trades, no emotion, only one single contract. Should be possible, correct?
Yes.
And most of the time, people having now mindset issues. They think like, oh man, why am I trading only one contract? Man, the market looks good. I have to trade 5. I have to trade 10. Maybe I have to trade 6. Different risk management, blah, 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 blah. Correct?
Yes.
That's the one mistake what people doing. If you will trade this like a business, you should be trade this like an entrepreneurship. So first, you be the business owner. You be the single contract, one MNQ. And if you're treating your business well with one MNQ, you have your profits, maybe little tiny profits, and you have your edge. You follow your trading plan. You have your A+ setups, and you prove that everything is good, and you grow with your account. What you can say as an entrepreneur, if your business is growing, you need one employee who assist you, will support you, correct?
Mm-hmm.
And who is the one employee for you in the trading business? It's the next contract.
Yeah.
Now you're trading no more with one MNQ, you execute now with 2 MNQs, but the same strategy. And you be the entrepreneur. You are only the one. You focus only on the execution with one MNQ. Maybe you have a copy account where you copy now, and the copies are now your employees. And with the new employee, you're doing always extremely good. You're growing now your business, and you become much better in the profit wise. So risk minus loss, same like in a business as an entrepreneur. You're growing your business, but you're falling always the same. You sell the same products what you have as entrepreneur. You do the same business what you're doing as entrepreneur, but you're growing your business. What does happen if you're growing again? You need some
Employee.
entrepreneur.
Yeah.
Some employee. You need a new employee. Boom! Now you have 4 contracts, but you execute based always on the same. And then you must make a new money. Then you're growing like expensive. Woo! You're reaching the tipping point where you explode. But you be smart. Maybe you need some employees, more employees. But what you're doing now, you're looking for an investor. You're looking for compounded money because you want to grow with your business. And now what happened? After 1 year in the business, 2 years in the business, where you're doing very well, you have a track record, you go now some investor and say, hey, look at this. This is my track record. Are you interested in my business? Do you want to invest in my business? Yeah, maybe yes, I'll give you 1 million. Boom! Because the investor is smart. Why is he smart? Because he was looking to your track record. He was seeing you was handling your employees very well, your businesses very well. You have consistency in your growing, and you have consistency in your risk. And the investor can now scale your business with 1 million capital. Whoo! Now the business becomes bigger and bigger. All right, let's go. Now we're doing exactly the same, but with 1 million capital. We executed based on our strategy. Maybe we have to fix something because it's now we're bringing now more money into the market, so we have a little bit adjust something. But therefore, we have some other people who can support us. They can help us to redefine our strategy. But at the end, we're doing the same shit again. Like Coca-Cola. We sell always Coca-Cola. Coca-Cola, Coca-Cola, Coca-Cola. Always the same. Then Warren Buffett comes, invest in you. You're doing always the same. Now you have more and more employees. Crazy, but you're doing always the same. You produce Coca-Cola. Or you execute based on your edge. You execute based on your A+ setups. And this is how the trading business is working. It starts always with one MNQ, and this is you as an entrepreneur. And then if you follow this, if you be patient and not making any shit, like thinking now, holy shit, now I have to be 3 contracts, 6 contracts, now 5 contracts, 1 contract, boom. This is not how the business is working. A business where can invest an investor is consistent. They want to see consistent over year. If you want attract employees want a company who is consistent growing, who gives safe salary, not any bullshit. And this is how your trading business is working. Scaling, doing the same. Get a new employee, you get a new contract, getting again new employees, attracting the big investor, Warren Buffett will invest in you, selling more Coca-Cola, and you're doing always the same. And at the end, you become bigger and bigger. And maybe we meet us in 10 years and you'll be one of the biggest hedge fund managers of the world.
That's a great analogy. I know we didn't plan this, but I have a spreadsheet that illustrates exactly what you're saying. If you want to, I could show it to you really quickly.
Of course, let's go.
All right. Just, everybody has their thing, but hopefully this will inspire some other people to run their trading business like this. So this is just a futures lot sizing for my particular, for the IB trade. I mean, you're going to have them for different trades, but so check this out. You see here on the left is the yield value of the trade, how much money that the trade is going to make on an average, on the average setup based on how many points that I get for target 1 and target 2. If I'm a 3-lot trader. So you see here on the MES, there's 3 lots. The point value is 5. The cash that I'm going to yield on target 1 for my standard trade is $50. The points for target 1 are 5 points. Because remember my statistics, if there's a 70% chance that when the IB breaks, that it's going to go 1.5 the IB, which is usually around 15 points. What are the chances that it's going to go 5 points? Higher than 70%. So I like to get 2/3 of the trade off with target 1. This is great for Top Step. You're going to yield $50 on 5 points, and then you go to the next lots for my target 2. The cash I'm going to get for target 2, the points, it's It's actually 1. Sorry about that. Or 2. And then what the risk is, and what the dollar risk is. I try to make my total trade risk, which in this case is $50, the entire amount that I would get on for hitting target 1. That way I have a winning system. If I'm constantly, if I lose $50 because I lose, but when I win, I get $125, that's a winning system, right? I'm losing 50, gaining 125 in a system that is right more than 70% of the time. That's just good math. But if I keep doing that, I can scale it up, just like you're saying to the employees are in column D. It's just the number of contracts I'm trading. The more contracts I trade, the more my trade yield value is, but the math stays the same all the way across. I'm gonna lose 500 if I lose, and I'm gonna win 1250 if I win. And I usually win, about 70% of the time. So, and the same goes for the MNQ. I have a similar sizing for Russell and points, etc. Similar for gold, similar for oil, and just kind of laid it all out on a spreadsheet, and that's the plan. That's the business. And then when you take the trade, you document the trade. Does it work perfectly every time? No. I gave an example earlier of how I was 2 points late on the IB break, and it messed with my head because I knew it wouldn't follow the math on my spreadsheet. So I sized up a little bit. And I did things that weren't good execution, and I ended up just going flat after making a little bit of money because I realized I wasn't doing what I'm supposed to do. It was time to just reassess, reevaluate. But the gold trade worked great. So
yeah,
that's the business.
That's the business, correct. And this is when you understand how you can approach trading as a real business. And do you know why you was figuring this out? Because you have the entrepreneur spirit. But outside, there are so many traders who may be having a 9-to-5 job. Maybe they are sales guys. Maybe they are engineers. They are really good in his job. And they're now thinking they can come into the trading business. But sometimes it's only needing a little tiny puzzle to become a little bit better. But expand it, go much more. So, and this is a small reminder: have an entrepreneur business. Treat this like a business, like an entrepreneur. So this is golden. So also what Barry is sharing now, he's an entrepreneur, man. It's going like this.
Yeah.
And understand the entrepreneur business, understand Menthor Q, how the levels are working, how you can approach your risk and your profits, and then learn trading, the simple basic rules. You have not to learn everything crazy, but you have only to learn and understand the basics. The basics from entrepreneurship, the basics of Menthor Q, and the basics of trading. If you're doing all together, perfect. And on your futures lot sizing, there's something what I see also. The lot sizing, they works perfectly with the end of the day drawdown. If you have the lot sizing with trailing drawdown intraday, I will promise you, it will blow up.
Yeah.
So this is also one good point, and why you should always use the smaller risk as entrepreneur. So have an end of the day drawdown, or maybe an static drawdown, but don't choose an intraday drawdown.
Yeah, for sure. If you're going to do intraday drawdown, you got to have such a small. In my view, if you're going to do a small intraday drawdown, you have to have a small risk budget, $100, $200 max, and never, ever, ever exceed it. because if you have a 2,000 day and you have a drawdown, that means you'd have to be wrong 10 days in a row, which is probably pretty hard. However, because it isn't intraday drawdown, you could be up, as you know, up 1,000 and still eat up 500 of your drawdown if you end up profitable 500 at the end of the day. So I don't think they're worth it. They're worth the money. It's hard to pass, much harder to pass something like that, and it doesn't exist in real life. It's not preparing you to be a real trader. And we want to be real traders. We want to use those. What I want to use those for is to supplement my real trading. I'm going through a process now that Fabio knows about, where I'm trying to add prop accounts onto my real account. So if I could trade my real account and send orders to the prop account, I'll be fine because I can make money in my real account.
And what is this? It's scaling. So you're giving your trading into your bank account, and then you're giving the signal, you're sharing your signal with a proprietary desk or with a prop desk or whatever. They're giving you commissions based on your trading signals, maybe profit split 80%, boom, scaling. Then you go to the next one, boom, they're getting also your signal, boom, scaling. But at the end, you're trading your own money, and the rest is like you catch everything. But you can only do this if you have a good A+ setup, if you be patient enough, if you follow your rules, and not doing like shit like today I'm placing this, or actually it looks good, or maybe I should do this. This doesn't work, my friends. You can never treat this like a business. It's never working. Like a real business where you can scale. Of course, you can be successful with this, but you can never attract any big investors' money. And it's never working. And maybe, Fabio, give us 5 minutes again, because we are now in a really good talk. What do you think, based on your entrepreneur spirit, is a really good risk management to treat your plan what you have?
So
How
I think
much you should be daily loss?
when you look at trading, so it depends obviously on the size, but I would say basically for me it would be like anywhere between $200 to $500 per day. Like that would be like a comfort zone that I can have without obviously having an impact on my life, which is very important. But then obviously in your case, Patrick, you are, with your experience, you are obviously, for you it's a smaller amount, like a bigger amount, because obviously your experience. But I obviously run a business, so I don't have as much time to trade as I used to have. So for me, that would be kind of like a good point.
I think there are 3 areas about good risk management, and I think we can really not bring this down into money, because this will not working. So of course many people say, okay, I have a daily risk management, but I will promise you this will be not working. Most of the time you will be not disciplined. If you have tools will lock you off, you can become disciplined because you have no other choices. But to become really disciplined, you have to manage 3 stages. Stage number 1 is where, what you were saying, Fabian, and this is absolutely correct, where your risk feel comfortable, where you say, oh, okay, I can live with this, no problem. The second stage is, and now it becomes critical, if you say, oh, what happened? This is the second stage. If you feel you be in a trade and you say to you, oh, what happened? So this is a warning sign. So then you should be immediately close your account. Oh, what happened? And the SOS is, holy shit. Because then your mind gets freezed. And I will promise you, you will blow up your account because you make stupid mistakes. So if you feel comfortable, this is the area, what Fabio was saying. Have a risk management where you ever come in a comfortable area, where you can always say, okay, I'm good with this, no worries. This doesn't mean I blow up. This gives me a chance for next day. The second change, oh, this is, oh, I would be very careful now. But if you came on the stage like, holy shit, you're done. And everyone have different approaches about this. You say 500. I have different approaches. But I think also, Barry, you have also your different. And I think you can agree with this. So if you feel comfortable, everything is good. You can manage everything. But if you came in the stage where you think, holy shit, so 100% sure you blow up the funded account or what else.
Yeah. And I think also, Patrick, we were doing live trading today, right? The best setup were the ones that we had a clear path by looking at the levels, looking at data. The worst trade that we did was when we were following emotions, right? So I think that's also a good point. What you do, Barry, is obviously you're following your strategy, you are adding data to support your strategy so that you have better chances of success. And then obviously you execute based on your kind of like flow and your principles. But you have supporting data that can help you kind of like make data-driven decisions with statistics and probability and obviously success rate.
Yeah, you want to have your left prefrontal cortex engaged in data, not your amygdala and your lizard brain in the oh shit, as Patrick puts it. It's like I don't really know what's going on. It's really hard. Like this morning, that gold trade, it was hard to hold through that trade because it was chopping around. There wasn't high relative volatility, but I kept saying, man, the stats are the stats. I'm either going to take a loss and I accept that, or I'm going to make great money, and it's going to flush, and it did. It was from a spiritual perspective. You talk about manifesting that $1 million that you want to do. There's something called specific manifesting and non-specific. And non-specific is, I want to be a successful trader and it feels really good. Okay, that's non-specific. But I'm a specific manifester, and I think if you really want to see your goal, you have to put it down in minute detail and live that goal in your head, on your spreadsheet, in your trading journal, and see specifically what it is. That's the only way that you're going to engage both your emotions and your logical mind in being successful in trading. Get very specific.
Yes, 100%.
All right.
All right. And I think we're getting now the press conference. Tim, do you see something?
What's he saying?
Any surprises?
No, nothing special. See VIX 1-day max. That's special.
Yeah, where are we at on that?
So 650 in ES maybe.
That's been such a powerful tool that I learned from Menthor Q is looking at the VIX intraday relative to the levels. Because I'd always known about the VIX and I'd always kind of looked at it, but now I look at it before every index trade. I try to see that correlation. Like Chester just pointed out, we're hitting that 1-day max, and there's an HVL 0 DTE level there. So we're either going to spike and the ES is going to flush, or we're going to revert. At least that's what I'm thinking as I watch the trade. And I'm sort of waiting to see what happens.
Yeah.
But we've got that nice put support level down there for the ES.
And others watching this stuff too, right? Because people are aware of the option levels in VIX as well as we are.
Mm-hmm.
And I would bet my ass they're running some smaller hedge funds maybe sell programs in ES and NQ, monitoring option levels and volatility. And if they say, okay, volatility is closing above 1 day standard deviation, we should sell some ES, we should sell some NQ, and don't buy the dip here.
Let's see.
I mean, it sounds kind of hawkish, what he is telling. Slower pace of cuts because of labor market and economy. It's always hard to gauge the movement around these days.
But the good thing, last time Jerome Powell was crashing the market on his interview, and now he's crashing again a little bit the market. So no worries. It's always opportunities. It's always free money. That's the great thing. But Tim, do you know, when I was starting trading and realizing something, I was realizing that the best case is, as a trader, to have tools on your chart, but what the major ones of traders also follow. Because think about if now many traders following Menthor Q or following the gamma levels, the options levels, following the order flow, following the volume profile, man, they're executing always based on this. So it becomes much more simple. So we know everything. Everyone see how we are. Boom, short. so,
Yeah.
so everyone short. So So and think about if you get, I don't know, 40% or 50% from the market with trading like this, holy shit, this becomes like a secret weapon. And I don't speak about only about Menthor Q. I speak about everything, about the options theory. If more and more people understanding how you can read the stuff, where Menthor Q can give you an edge, or if you're understanding the concept of order flow, or if you're the concept of options volume and all other stuff, man, it's so crazy. And if everyone still follow this, woo! It becomes the best market in life.
Yeah, it's always hard to say you have an edge or advantage because, there's so much algos out there. They're executing like 1,000 times faster than you. But I think Barry mentioned it with the VIX, reading the levels in confluence with it. That's some sort of edge, at least in our retail space, right? Because not everyone is watching, and then they maybe say, okay, yes, 6,100, that's a buy, that's a round number, right? They want NuGet be down. But then you're watching your Wix chart and you're seeing, oh Jesus, it's already trading above major GEX levels. That's maybe not a good buy. Let's wait. So, yeah.
Yeah, I think ultimately the edge is math, being consistent with your math.
Always.
And, if you don't know that you're losing twice as much as you win overall, trade by trade, then you have a problem in your trading.
I mean, Jimmy Simmons had no clue what stocks are or what futures are or what commodities are, but he was a professional in mathematics with a great degree, and Medallion hedge fund outperformed everything.
Yeah. It's an amazing story.
Mm-hmm.
I mean, when I was developing my trade, particular trade, I was having a hard time coming up with a stop, because I know, and I had the account size to do it. I know if I just hold on, there's only a 3% chance it's going to or there's 20% chance it's going to hit the other side of the IB. So most of the time, if I just take the heat, I'm going to get a win. Like that's, but you know, that destroys my mental capital, and it doesn't give me, you know, I lose concentration when I'm taking that much heat. I can't look at other things. It just really messes with my head. So I needed to find a way to get the math in my favor. And I wasn't looking at it objectively. So I sat down with a friend who was a professional trader who's trading like we do. And we just went through it. We just talked through it and played with the numbers. And I came up with my stop that makes sense and keeps the math in my favor if I execute consistently.
Yeah. And keep tracking that stuff. So you have some sort of journal, right?
Yeah.
All right. Fabio, I have one single question for you.
Let's go.
Did I am a mathematical genie? I think absolutely not. Did I
No.
have any clue about the trading business? Absolutely not. I'm doing only my Einstein stuff. So, and what I show you have absolutely no sense with financial mathematics, but it's an edge. And I will show you this. I will now present this to you. And this is critical because we were speaking about the VIX. And you will say, man, Patrick, you're a stupid idiot. So this have nothing to do with mathematics, but I will promise you it's an edge. So, all right. So, Fabio, do you also remember about our 6 a.m. morning club? So today we was speaking about the Bitcoins, correct?
Yeah.
And I was saying, okay, let's plot the SPX blind spots on our MBT chart. And we see a bunch of blind spots there, and take care of this. So this is a sign. So I'm not a mathematical genie, but if I see something like this, this is a sign. Be careful on this. I was told you this, correct?
Yeah.
Correct me if I'm wrong. All right. Let's go to VIX. Boom. What we have here, look at this, where we have now our SPX blind spot wall. Boom. And what was happened? We're breaking through this, and the party was starting. And if we're going now on the 4-hour time frame and we see what the blind spots are doing, it makes totally sense what they're telling us. So the story on the left side, see on the story on the left side, and boom, did it make mathematically sense? Absolutely not to plot this there. So, but what I want telling you is sometimes you have not to be the mathematical genie, but you have to find the lag in the matrix so that you can go into the matrix, that you can find a small little hole and you take it and you're going into the matrix.
I mean, and I think going back to the business, you know, I think you could have the best strategy, right? But you need to execute well. So if you are not a good executor, then any business could actually fail. So I think what Barry does, yes, the strategy is important, but then it comes down to how you execute your plan, how you execute your trading strategy, and so on. Because otherwise, everything else is really just on paper, right? So,
yeah, I was telling Fabio the other day that I love the handshake trade, but I can't push the buttons fast enough. So I'm developing a way with this new software to get the software to execute the sell and the buy, so I don't have to push the buttons.
Oh, okay, Barry. Wait 1 second, please. Oh, what is the handshake trade?
this is the handshake trade.
Yes. And do you know, Fabio, when I was speaking about the first time in the Menthor Q community about the handshake trade, you were saying, holy shit, what are you doing now? And look at this.
Yeah,
I'm not a mathematical one, but I was saying, okay, let's trade from high wall to high wall, put support to put support. So we have the level. So that's always a really good areas. That's like the handshake. So it's working. Did I'm a mathematical genie? No. I see only the glitch in the matrix, and that's it. We have to go in. And it was really good, Barry, that you're taking this.
yeah. And Barry, we have a question for you. What is the indicator or the IB probability that you use?
So the indicator that you see on my charts is just an IB. So the initial balance is the high and the low of the first hour. So most charting packages have that. What's the high and the low of the first hour? And then, and that exists in
Trading View.
And actually looked this up earlier. It's the one I'm using is initial balance by Noop. It's Noop, Noop dash Noop. I use that one. And then I got my, I get my stats from studies of price action over 6 months to 5 years, buying various services or whatever. I have these services or I've had them in the past. So
awesome. All right, and now we broke put
Just
support.
The Wix goes crazy. The Wix goes absolutely crazy. It's not stopping.
Yeah, I know. I had a short in the S down to 650.
Nice.
But it's kind of hard to have the trade open and talk to you guys. So yeah, VIX above 18, call resistance, X wall. It's the same now. All the exposure opens over there is now in the money. So as a market maker, your deltas are getting higher. So you have to buy VIX futures. And if you have to buy VIX futures, it's usually not a bullish sign for the equity indices, right?
Yeah, it is. It's hard to trade. I had stop sell orders at put support, so that because I have I'm short puts, so now I'm short the ES, which is hedging my puts. So I'm thinking like a market maker too. Once it broke put support, I started selling.
Yeah.
But I couldn't do it and talk to you guys, so I put the orders in to automatically take off. And then, of course, if it goes above put support, I'm already long because I'm short puts, and I'll be out. So I'm going to be buying, and I'm just a little guy, but maybe that's what everybody else is going to do. When market makers are going to have to do.
Oh, but Chester, I have one question for you, because people asking this also in the community from Menthor Q, the initial balance. So what time you should be used for gold, for oil, and for the equity indices like NQ and ES?
Yeah. So the equity, it's the New York Open, 1 hour, so 9:30 to 10:30. So that's RTY, NQ, ES. For oil, I use 9 to 10 a.m. And for gold, 8:20 to 9:20. I mean, you can, and I've run the statistics on gold from like 9:30 to 10:30, and they're virtually the same. Because everything's electronic.
Yeah, the old saying says 8 to 9 for commodities and bonds, and 9:30 to 10:30 for equities.
Yeah. I think the one thing everybody can agree on is 9:30 and 10:30, 9:30 to 10:30 for equities. My stats are just run on those particular processes.
That's valid, sure.
100%. Jesus. So last time when we're getting the FOMC, so we're getting most of the time no price action, or we get it.
Yeah, I mean,
End of the year.
think about it's the end of the year. We have OPEX on Friday. It's the last 2 days of trading, so I think it makes sense. Yeah. All right. So I think, guys, I really would like to thank you, Barry. Sorry we took longer than your time, but I mean, what you showed us was amazing, and I hope to have you back very soon as well, because I love like the way you teach us, the way you show the levels. For those who want to join our Discord, please set up a free account and you get access to a lot of the educational stuff. You get access to our Discord, the community, our newsletter, so you can be within our platform. And then obviously, if you want to join our membership and access the data, you can do that as well. We're going to have some promotion starting on Friday for our Christmas and holiday break, so stay tuned on that. And really thank you, Tim, for your obviously great insights on the macro side. And in 2025 we're going to do more great things on that. And thank you, Patrick, as always, for your life coaching and your mathematical skills.
My mathematical skills. Don't tell this my wife. She's the doctor in mathematics. So
and guys, please follow us on YouTube. We have a lot of really nice live sessions that we did. So yesterday we did one with Chris and Ryan about volatility and tail risk. So really, really advanced things. We're going to have a really nice session with Dan tomorrow on options. So just please follow us. Would really help us a lot. Sign up to our channel and stay tuned with our content. We have a lot of really good stuff here.
But I know, Fabio, I should not have the last word, but Barry, okay, go ahead.
You always have the last word, Patrick.
Oh, fuck, yes, my wife told the same. Okay, Barry, go ahead.
All right, so thanks for having me on. Super fun. Love trading. I just started reading the chats, so I'll share my spreadsheet in the Discord.
Yeah.
And if you have any questions, reach out. I think it's great to talk and collaborate. And I love that guy Pax when he says no one trades alone. I'm alone in this basement while we're trading, but it doesn't feel like it when I'm hanging out with you guys. So
I love it. I love it.
That's great.
Yeah. Thank you, guys. And again, thank you, Barry. Thank you, Patrick. Thank you, Tim.
No, wait.
You want the last word. Sorry.
Yeah, I want to. All right, guys. So for me, it's the last session, but only for this year, so no worries. So tomorrow we have a live session, but I will not be live there. So it's Fabio and Dan.
Yeah.
So, and I would say thank you to all who was watching our lives. With everyone who we were getting together on the live session. So now you, Barry, now you, Chester, we are the last one for me in this year. So thank you to all. And yeah, wish you Merry Christmas and Happy New Year and a lot of money. No luck, only a lot of money. And all right, have a good one.
All right, we'll see you later.
Bye, guys.
See you guys. Bye-bye. Thanks.